What if you could keep more of your hard-earned money in retirement? Imagine if your Social Security checks were free from federal income tax. Sounds too good to be true, right? Well, it might not be. Donald Trump has proposed a plan that could completely change the way you think about Social Security taxes. This proposal could potentially benefit millions of retirees, offering significant financial relief to those who rely on Social Security as a major source of income. In this video, we're going to break down exactly what Trump's plan entails, how it could impact you, and what needs to happen for this proposal to become a reality. We'll also take a look at the political landscape, the challenges that lie ahead, and what this means for the future of Social Security. By the end of this video, you'll have a clear understanding of how these changes could affect your retirement income. So stick around until the end. You won't want to miss out on this important update. Welcome to Financial Area, your go-to place for everything related to personal finance. If you haven't already, be sure to hit that subscribe button, like this video, and let's dive right in. Donald Trump has proposed a significant change to how Social Security benefits are taxed, with the goal of eliminating federal income tax on these benefits entirely. Currently, approximately 40% of Social Security recipients are subject to federal income tax on their benefits, and this new proposal aims to provide financial relief to these individuals, especially retirees who rely heavily on their Social Security income. For many, this could mean a substantial increase in the money they keep each month, easing the burden of living expenses and enhancing their overall financial security in retirement. At present, Social Security benefits are taxed depending on the income of the beneficiary. For individuals earning between $25,000 and $34,000 annually, up to 50% of their Social Security benefits can be taxed. For individuals making more than $34,000 a year, this percentage jumps to 85%. Married couples face higher thresholds, but the impact is still significant. Unfortunately, these income thresholds have not been adjusted for inflation since their introduction, meaning that more individuals are gradually finding themselves subject to Social Security taxation, even if their income has not significantly increased in real terms. Trump's proposal would completely remove this tax, giving retirees the full benefit of their Social Security payments. This change could be especially beneficial for those in lower income brackets or those who depend on Social Security as their primary source of income. For many retirees, Social Security is the only consistent source of financial support, and eliminating taxes on these benefits could make a world of difference. With fewer taxes taken out of their benefits, retirees would be able to use more of their income for daily living expenses, healthcare costs, and other necessary expenditures. It's a simple yet powerful way to give back to those who have worked their whole lives to earn these benefits. While Donald Trump's proposal to eliminate federal income tax on Social Security benefits sounds promising, its success hinges on the support it receives from Congress. The plan would require significant political backing to become law, and navigating the complexities of bipartisan support could be a major challenge. Both Republicans and Democrats have historically struggled to reach an agreement on how to address Social Security taxation. For instance, past attempts to reduce or eliminate taxes on Social Security benefits have faced strong opposition from those who argue that the funds are necessary to support the program's long-term sustainability. Given the political divide and differing priorities on both sides of the aisle, Trump's proposal would need to build a coalition of support, likely requiring compromise and negotiation on other fiscal policies. In the past, both Republicans and Democrats have made efforts to tackle the issue of Social Security taxation, but those efforts have often been met with resistance. For example, under the Reagan administration, a tax on Social Security benefits was first introduced as a way to address the funding gap in the Social Security Trust Fund. While the tax was initially controversial, it became a fixture of American tax policy. Over the years, both parties have proposed various reforms, including raising the income thresholds or adjusting for inflation, but these proposals have failed to gain enough traction to make significant changes. Trump's plan is not the first time an attempt has been made to reform the taxation of Social Security, but it presents a unique opportunity to shift the tax burden away from retirees. For this plan to become reality, it's essential that members of Congress from both parties acknowledge the benefits it could provide to retirees and the larger economy. However, some lawmakers may be hesitant to back the proposal due to concerns over the potential impact on the federal budget or the long-term stability of the Social Security system. The proposal would likely face scrutiny from both conservative lawmakers, who may argue that such tax cuts could exacerbate the national deficit, and liberal lawmakers who may fear the plan could weaken the Social Security Trust Fund, which is already under strain. As such, gaining enough political support could require negotiation over how to balance tax cuts with maintaining the solvency of Social Security. If the plan were to gain traction, it would likely spark intense debate over how to fund the changes and whether raising taxes elsewhere or making cuts to other areas of government spending could offset the potential loss in revenue. Political consensus would be necessary not only to pass the legislation, but also to ensure that it doesn't have negative long-term effects on Social Security's viability. While Trump's proposal may offer a solution that benefits retirees, navigating the political landscape and securing enough support in Congress will be a critical challenge. The future of Social Security is uncertain, with the trust fund projected to run out of money by 2034 to 2035, a situation that could significantly reduce benefits for retirees unless substantial reforms are made. The Social Security program relies on a trust fund to pay out benefits to millions of Americans. As the population ages and the number of retirees increases, the strain on the fund grows. With fewer workers contributing to the system and a larger retiree population drawing from it, the sustainability of Social Security has become a pressing issue. If the trust fund is depleted, the federal government would only be able to pay out a portion of benefits based on incoming payroll taxes, which could lead to reduced monthly payments for retirees. This looming financial crisis underscores the need for changes to ensure that the program remains viable for future generations. One potential solution to help address the financial challenges facing Social Security is raising the retirement age. As people live longer and healthier lives, there's been ongoing discussion about pushing the retirement age beyond the current threshold of 67 for full benefits. Proponents argue that increasing the retirement age would help reduce the strain on the system by limiting the number of years individuals collect benefits. However, raising the retirement age is a contentious issue, particularly for those in physically demanding jobs who may not be able to work longer. Critics argue that such a move would disproportionately impact lower-income workers, who may not live as long and often rely more heavily on Social Security. Despite these challenges, many experts suggest that adjusting the retirement age could be an essential step in keeping Social Security financially sustainable. Another key factor in ensuring the long-term success of Social Security is maximizing benefits for retirees. The age at which someone starts claiming Social Security benefits plays a significant role in the amount of money they receive each month. If individuals claim their benefits early, at age 62, they can expect a reduced monthly payment compared to those who wait until their full retirement age. On the other hand, delaying benefits until after the full retirement age can result in larger monthly payments, which can be crucial for individuals who are in good health and can afford to wait. For example, waiting until age 70 to claim Social Security can increase benefits by up to 32%. However, deciding when to claim is a personal decision that depends on various factors such as health, financial needs, and life expectancy. The average Social Security check can vary significantly depending on when a person starts receiving benefits and how much they've paid into the system throughout their working years. On average, as of 2024, retirees receive about $1,800 per month, but this figure can be higher or lower depending on their earnings history and the age at which they claim benefits. The decision about when to begin receiving Social Security is often influenced by the desire for immediate income versus the long-term benefit of waiting for larger payments. However, for many retirees, every dollar counts, and having the option to maximize benefits is crucial for maintaining financial stability in retirement. Understanding the relationship between the claiming age and benefit amounts can help individuals make more informed decisions that will have a lasting impact on their financial well-being.